Okay, everybody, good morning or good afternoon, depending on where you are. A little bit of a late start here on a Monday, hour later than I would typically shoot for or prefer. When we did the stream on Friday, we talked about Moore's Law and Metcalfe's Law. It's kind of becoming a thing now where I'm having to iterate or correct or repeat or make new charts based on whatever I talked about in the last stream. So I'm going to do a little bit of that right here this morning. So in the last stream, we talked about Moore's Law. All right, so just talking about transistors or integrated circuits or chips, basically the power of them doubles every 2 years. This was the observation by Moore in 1965. It seems that Bitcoin has caught up to this at the moment. But we're going to try to talk about value versus these things. Okay, so Moore's Law, as I talked about last week, is exponential. It's a little bit different than the power curves that I've been drawing for various metrics of Bitcoin's performance. Now, right after this, we were talking about Moore's Law. Someone asked in the chat about Metcalfe's Law, and I think I even looked at it, but this just happens when I stream live. I was still thinking of Moore's Law when we were talking about Moore's Law on Friday. So basically, the square of the number of nodes or the number of connected users, that's Metcalfe's Law, that is a power curve. All right. This is even incorrect as far as the formulation of the formula is. They're saying it's Metcalfe's law is exponential, but it's actually power. It's just raised to the second power. So some people think that it's squared. So if you look at the site here, my site, I'll show you the power curve. This is the formula for the power curve. And Metcalfe's law is basically just saying that if X is your number of nodes, Y is your value, the network will grow by the square of the nodes, which is B would equal 2. The nodes would equal X, and the value is Y. And A is just some constant of a scale factor. It's going to depend on how the sharpness of the curve looks. And again, this is just price. Over time in Bitcoin, it's a log scale. You can get a straight line. Oops, there we go. And that is how the power relationship works. Now, how would we do this in Bitcoin, talking still about Metcalfe's law, which is, we could look at nodes. Nodes in Bitcoin is actually harder to measure. And plus, you have lightning nodes now, not just listening nodes on chain. The old godfather of the power law, Giovanni, he's shown some different ways with addresses. I'll get to addresses here in a second, but my little chart engine runs better with dates or time than doing different. So here he has time here. Here he has addresses with zero balance, with no zero balance, versus price, and your power is actually pretty close to 2. Okay, so it's a pretty good representation of Metcalfe's law right there. Price goes up as addresses with zero balance goes up. You run a trend, N equals 1.776. This is back to time as well, price versus time. Here you see the power. This is back a little bit. We're at 6,000 days already. Just past 6,000 days since the Genesis block. So congratulations. The power is 5.65 over time, but if you look, the power of price versus address is 1.78. So you can do this various ways. Here's hash rate over time, price over hash rate. This is another good example of a Metcalfe law, although the ratio doesn't exactly equal 2 in this case. Okay, it's 0.5. Not the ratio, excuse me, the power. All right, so this is hash rate versus price. So as the hash rate grows, as the price grows, okay, this one. Then he's got another one. I think he's got addresses and price. Yeah, so again, this is price and addresses with zero balance, but separated by whale addresses, dolphin addresses, crab, shrimps. And you see, they're all power because they grow. The trend is a straight line on log of this relationship. Okay. And it's actually with time, whether you do it over time, price over time, or price over addresses, you still get this straight line phenomenon. So that is Metcalfe's law. And so when I was saying Friday, just talking about Metcalfe's law, but in my mind, I'm thinking about Moore's law. That was the confusion. I saw a comment on YouTube. In any event, here I want to talk about now just versus time, and we can get the power coefficient just to show you what it would look like, and also what it means practically when you're talking about the growth rate of these things. Okay, so this is daily active addresses. This is different than what Giovanni was just charting. Put it on log scale. Okay. Again, this chart engine just doesn't work well with log, also with non-dates at the moment. But this is over time as we increase every day, how do addresses work? So even if you take out sort of the bands, this is it. And you see the trend, it's not as good as the price over time trend, 89% R squared. And you see here, it's the trend is growing, and daily active unique addresses is sort of stagnant here, which is kind of interesting. But this, of course, is not the only way to grow network, but I just want to do it to show you a way that we can do it basically on this type of a chart. So, you know, all the way basically until the 2021 boom, we were above trend, sort of raising the trend. Now we're pulling the trend line down. Okay. And if you look, if we put little bands here, we're below trend and getting to a 1 sigma down. Now, obviously, the value of the Bitcoin network is still flying high, and that's not in this chart. So to put that in this chart, again, versus time, not value versus addresses on the x-axis. This is, let's do value divided by addresses over time. All right, so here we have it here. Let's take away the bands really quick. Let's even take away the price. Okay, so now what you see here is basically market cap dollars per daily active address. And as this is basically a rising market cap versus a falling daily active address usage, you would expect the opposite when you take that ratio of the rising address cap versus the falling daily active address. And so that's what you get. Let's put the bands. Okay, so 2021, again, was riding up above this 2 sigma number, which is basically 2/3 of the time multiple that I'm using here. Don't have dollar signs on those sigmas, but they should be dollars, basically. And now the market cap per daily active address of Bitcoin is $2.9 million. Okay, so it's 2.9 every time there's a address that sends or receives on the Bitcoin network, a unique address every day. Count that up. Take the market cap divided by that, it's $2.9 million. The trend line is only 1 million. All right, so we're well above trend, as you would expect if trend was falling. Let's put 2 sigma up. Okay, now let's just go back to the early days. Obviously, we're trying to figure out what all this stuff meant. We were bouncing above the trend, bounced above it in 2013. Did not bounce above it. Again, I use multiples. My analysis is more of a multiple here. Did not bounce above it in 2017 or 2021. But getting a little bit hot here, which is interesting, in 2025. There's a couple things you can say here. First of all, Lightning Network was not around here. It was growing pretty fast here, but it was still kind of nascent. It's pretty active here. So it's possible that the volume of payments are not necessarily needed to be reflected in the daily active address count. It's also possible that whales are just hodling more and not using Bitcoin as much as the early investors would use. But it is interesting that we're getting to a little bit of a topping signal here. If you look at price, obviously this was towards the peaks. This was towards the peaks, and now we're having this nice big run up. So this one looks a little bit rich, but that's not the only way to look at it. All right, we can also look at market cap divided by the payments. And so for that, it's also a network type effect. It's not exact same thing as Metcalfe's law. We can do this for all sorts of stuff, right? Hash rate. It's not exactly the square of the number of connected users. But obviously this one I'm going to look at. When users are making payments, all right, that implies that there's a send and receive address. All right. And payments, remember, are the more active version of transactions. Transactions are basically the final thing that gets through into a block. But inside a transaction, you can batch payments. You can do a lot of other things. So basically, it could be many payments per one transaction. So I'm calculating the payments here against the market cap. Let's take out the red lines and just see what this one. All right, so this was above the 1 sigma here in 2013, 17, 2021, and getting above it again. Now let's put the 2 sigma. This one, we see how we have some room. It didn't really hit it in 2021, but back in the early days, we did pretty much bump up against it in 2017, and then back in 2013 and 2011. In 2017, though, interestingly, was still pretty much around the 1 sigma. So you put the price, obviously you can just overlay it. You can see where the action is. In this case, it looks like we got a little bit more room to run. That's why it's good to just keep looking at different variations here of network economic data versus market data. So it is a Metcalfe. Bitcoin definitely is a Metcalfe type of a phenomenon. I'll keep adding to this to come back to this. I've shown this one before and this one before. I don't think I've shown per payment. But obviously, when you start to overlay the market data versus the network data, you can start to see, booms and sort of drawdowns. I don't like to use the word bubbles and busts or anything with Bitcoin because it's kind of how it goes. But the trend here, okay, just to remind you, the trend is about $1 million in market cap per payment. Per payment. That's just the trend. And then what we're actually doing at the moment is 3 million in market cap per payment. Doesn't mean that's the volume of the transaction. That's a different analysis. But if we want to look at the market data, this is what Bitcoin is throwing off. This is what it's showing the value is. Okay, so it's a power curve. Not as good as the price, right? 87% R squared. With addresses, it's a power curve, 90% R squared. Market cap per address. Both of these are over time, okay? And I'm only doing that because it's better for my charting software, for this charting engine. But of course, again, going back to what Geo has done, if you, for example, price and hash rate, you can do, again, price. Oh, sorry, you guys can't see that, can you? I didn't even notice when I was saying it, but I'm looking at this third chart, which I cannot. Let me see. No, I really can't. Basically, bottom line, this is price. The third chart here is price and hash rate on the x-axis. And you can see that there's a log straight line relationship there. Okay, and 0.5 is the power. So it's not always going to be 2 with Bitcoin. Okay, all right. It's they say the square, or the number 2 is the power. All right, so here's the formula. All right, 2 is the power if you're going to use Metcalfe's law. But it can be pretty close. So now let me tell you, for both this one and this one, let me tell you the power curves. I don't have this on my website. I've just been calculating them through, manually gone through them again today. So for this one, the exponent is 3.5. 3.5. Okay, so again, it's you could say it's moving a little bit faster than Metcalfe's law. In this example, market cap per daily active address. And for this one, market cap per payment, the power is a little bit less than 3.5. Well, right about 3.5. So they're both actually very similar. Okay. You can actually call them both 3.5. 3.5. 3.5 for both of these. And then there's another interesting analysis we can make here, which again, I've done this. The difference between power curves and exponential curves is that Bitcoin moves proportionately. Exponential curves move constantly. Okay, and I'll show you an exponential curve here in a second. But this is proportionate growth. And then how do I describe that proportionate growth? Right here, another way to look at it. Look at this, this last column in this table on my website. This is just back to simple price. All right, the trend line of the price, the power curve of the price. You see where it was at various times. Okay, and then I'm doubling it. So when I say see where it was, I'm looking at it at doubling. Okay. And then how long did that take to double? It's here. So first was day 505, then day 569, the trend line doubled, then 641, okay? But once you do the math there, you can understand the proportionality. And what is the proportionality? It's 12.7, 12.8%. So what that means is no matter where you are in the cycle, and right now we are right around 6,000 days. So we literally just passed 6,000 days of Bitcoin since the Genesis block, which, we're between this point and this point, 2024 and 2026, okay? We're literally at day 6,000 right now, okay? So roughly add 626 days to 5.5 or 700 days to 6.2. That is a 12.7% increase in the days of the cycle, the days of the network. Bitcoin's price doubles. Bitcoin's adoption doubles. That's how to interpret brass tacks, what power curve growth means. It's proportional. And it's important to, I think, for education, to show it this way, because you can get to sort of a number that at least should intuitively make some sense, but it's not going to be as easy as exponential curves, which is, what your stockbroker is used to talking about. You got to back into these numbers a little bit differently. You got to work with them a little bit differently. So if I want to tell you, and remember, the exponent here is nearly 6, okay? I need to find it exactly to give you it exactly. It's on my website, actually. It should be here. I pulled it. Yeah, 5.8 is my exponent. See it right there? The slope. That's the power of the power curve. That's the exponent. 5.8 using price. Okay. Now remember, I just told you for this chart. Good morning, Anders. Good morning. I'm just rehashing Metcalfe versus Moore's Law because Friday, when I was thinking in my head, it was Moore's Law. I was reading Metcalfe, so it was my confusion. But anyway, for both of these, Metcalfe's law, power curve law, the slope I just told you is about 3.5. Okay, so it's a lower slope than this, all right, which is 6. So if I don't have a chart for you or a table to show you yet, but if you wanted to see, or you wanted to ask the question, for what increase in days would it take for the market cap per daily active addresses to double, or the market cap per payment to double? Since the growth is slower, the power is lower, the growth will be longer, and it's about 20%. So the network has to increase by 1/5 for this chart to double. Okay, so again, just to try to be less noisy and talk about market or network growth, let's go to just a random rough day. Okay, so from the December 2017 top, all right, the end of the year 2017, the regression is 121,000. 121,000. Okay, let's look at when the regression doubles. Not the price itself, not the market cap per payment itself, but 121,000 market cap per payment. Okay, so we're going to go up to 242. Right there. Okay, so it's basically nearly 2 years. Nearly 2 years. And at the time, 2 years out of 10 years is 1/5. You want me to explain that again? December 2017, we're looking at the trend, not even the price, we're looking at the trend of this green line, which is market cap divided by the payment. Okay, so the trend line itself, 121,000. How long does it take for this trend line to double? It's not constant growth. Well, but we do have proportional growth. We know that number. But anyway, let's just back into it to find it. 121,000. 121,000. Here we get to 242,000. It takes basically 2 years. 2 years divided by 10 years. Bitcoin network was 10 years old in 2019 is a fifth, 20%. So that is another interesting way to look at the power curve on these other on-chain metrics. Yeah, it is interesting, and I think you can also derive the tops from this, and this is, like I said, this is Metcalfe's law. Even though I was saying Moore's law, I want to get a chart that will show Moore's law too, because Moore's law is exponential, and Bitcoin shouldn't be on that curve. Even if you looked at hash rate or other things, it should be faster than Moore's law and then slower than Moore's law. Or at least just, it should be a different trend than Moore's law, but it is Metcalfe's law, because Metcalfe's law is a power curve. Even though it's confusing here, they say the network grows exponentially. I would argue this AI is not being rigorous here, because it's just the exponent of 2 is what it is. Exponent of 2 is, roughly speaking, Metcalfe's law. And in these two examples where I'm using network type things, market cap divided by daily active addresses, market cap divided by payment, both of those, the coefficient is 3.5. And this one looks like we got room to go. But we're definitely getting up there. Okay. And this one already warns that we're topping, but addresses have been falling to the trend for some time, and I think it's a function of other things. We've been through 3 bulls now as addresses have been topping or peaking, just addresses by themselves. All right. Again, if I did log, this would be a straight line, but I can't do it on this chart because it messes up. I'll show you how it messes up right there. That actually didn't look bad, but my axis is messed up. You see the dates. Anyway, it's a straight line. On log, it's a straight line. But it doesn't work on I haven't worked the kinks out to make the dates show up as they should. Because remember, this isn't dates, it's days. It's a long story. Yeah. Scale invariance is another way of basically defining this proportionality. So that is what Smithson and Plan C and those guys have been trying to determine as well with their quantile regression. Whether it's just a straight up quantile regression or exponential decay, it does seem that the bubbles are obviously falling in amplitude. But this one and this one still, just other good examples of keeping on the same trend, just looking at it differently, right? So market cap divided by the total payments. Total payments, by the way, are something like 1 million at the moment, if you're wondering the number. I mean, it is literally 1 million here, you see, because if it's a $2 trillion market cap divided by 1 million, that's going to be 2 million is the ratio. So payments are around 1 million a day from unique senders and receivers. Actually, not even unique. There's no adjustments. It's just straight up payments. And we can draw power trends on this. Thank you, Anders. I think that's another way to define it. But yeah, if I've said Metcalfe's law, I was thinking about Moore's law. Sorry, but Moore's law is Bitcoin has already caught up to Moore's law, and it was like going very, very quick. You can read Wikipedia articles about how fast chip production has occurred on the Bitcoin network. It's like from concept to market, it's like the fastest thing ever. So it's even faster. It's been faster than Moore's law as far as bringing computational power to Bitcoin. But as far as generally Metcalfe's law, which talks about value, it's a better overlay. I think it's a much better overlay on what Bitcoin is. And then I want to go back to the exponential idea. All right, so I just finished this. And it's interesting because I started both of these points of research in 2018. I was more focusing on this in the early years, like how, because this was just really exploding. Although they were cooling off central banks from really the Fed from 2014, but other central banks from 2018 until the old crazy times hit in 2020. I've been thinking if I should say those keywords about what happened in certain years, whether I'll be censored on some of these different channels, but whatever. My live stuff isn't that big anyway, but just one question Daniel had. Hello, going back to this. So payments are each transaction can hold a sub amount of transactions. Basically, they're called payments. It's not the only way, but the most typical way that this can be done is if you batch payments in one transaction. So exchanges, for example, they do this all the time. Exchanges work 24/7. They withdraw and take Bitcoin all the time, but when they're withdrawing, they're not just going to send one transaction to one user. They have in their systems automated very easily. Best practice, they might have 100 or whatever it is, 1,000 users ready to withdraw at any one time. So they make one transaction with 1,000 payments. So the payment is the 1,000 in this example. And the number right now is about 1 million, give or take. It's wild. I mean, it can swing. I actually don't think I have a payments itself set up with these bands, but I need to. So it's something like 2 to 3 on average, 2 to 3 to 4 times higher than the transactions. So transactions can be 300 to 400,000 per day. Payments are like 1 million right now. So this is the market cap divided by a payment to give us that linkages of like an on-chain thing versus a market value thing. And in doing this, we start to create something that's like Metcalfe's law. It's not, I know it's not exactly nodes, but it's something like that. You can use addresses as well. You can use hash rate. I'll make more of these just to see where we are. And you can do valuation things on this. So we're getting up there. We're getting up there this cycle. But then just going back to the exponential thing, I'll probably launch the report maybe tomorrow. It's just a Twitter thing. I've been doing it now for 7 years. It was a little bit higher than I thought it would be. You see, after all the madness of the money printing, a couple of years ago, they've been trying to pull it back. All right, so we topped at $30 trillion. of central bank money. And now we're at 26.2. So that's going to be the number for this latest report as of March. I know it's like way delayed. Generally, it's delayed. You know, it's funny. I go through these central bank balance sheets, and it's just like, you know, some of them still haven't been updated through January. Some of the smaller central banks, but most of them in my data set, which are the top 50 currencies in the world, have been updated through March, but just barely. You know, some of them go into April now. Some of them would be even through May, but you just kind of got to put a date on it and then move forward. But anyway, the point is, if you zoom in here, I thought we would be, so December it was 25.5 trillion. I thought we would even be lower from the just discussions that were happening from the Federal Reserve primarily. But it ended up being higher, actually, from December 2024. So the Fed itself, you can see, was 5.6 trillion. See the dollar at the bottom there. And yeah, and so 5.6 trillion for the dollar monetary base. Now it's 5.78. So they've really been pulling it down for the last couple of years, but it's just kind of coming back, even though they haven't really changed interest rates in the United States. The euro was 4.87. Now it's 4.96. They are dropping rates. And again, a dropping of rates is going to equal generally, not always, but generally an increase in this number. Bottom line, the global number was 25.5 trillion, now 26.2. And if you look at this on log scale, the old exponential growth, you can see that fiat-based money is absolutely exponential growth, 99% R squared. Sometimes it can be above the trend, sometimes below, sometimes back above. That's where we get these red lines. But then if we look at where we are actually today, it's like super low. Still super low. And generally, looking at where pendulums swing, I expect this to come back. But, and this goes back to the ultimate chart, which I'll give you here in a second. I still think, after, you know, doing this research for 7 years and then like this research, which is power curve research for 7 years, I think this is still the most important phenomenon of how the Bitcoin network grows, is something like this. Or if you just look at price in general. All right, so put this back on. This is the one that links all of them together, log scale. All right, let's take the dominance off. It's like the real Bitcoin dominance index. Ah, shoot. I always forget. Got to redraw this, my engine. You can see a lot of this stuff if you want to look for more on my website. Always donate, please, if you can. All this is always going to be free, no newsletter style. So let's go log left. I got to take these off. This is latest research, all right, and extend it out a little bit more. Okay, so June we start the trend line. My monetary base stuff is fully updated through here, and then you just sort of estimate based on dollar trends, currency trends, and also remember gold is included in this number, and silver. That is available stockpiles of those things. You get to a bigger number than I had before. So it's not just 26 trillion for fiat money. You add in gold and silver, you got 43 trillion. You grow it out. This blended exponential curve from the time that Bitcoin has been around is roughly growing at between 7 and 8% per year. And I don't see any reason why it's not going to continue to grow this way. Add Bitcoin. Look what happens to this curve when we add Bitcoin, something so small at the beginning. This curve, the green line now is like almost a straight line. And then we can do the same thing with Bitcoin's market cap. We're at 2 trillion valuation right now. Spread it out, not spread it out, but project it out. And something like 2043, 150, 155 trillion is we're going to reach that 100%. Good morning, Joe. So yeah, that was all I wanted to do for this one. Was kind of it's constantly iterating and correcting myself. But if I was saying Metcalfe's law on Friday, I was thinking Moore's law. So again, apologies for that. But Metcalfe is definitely more analogous to Bitcoin than Moore's law, which is exponential. And you put it all together right here. Okay, so one of these is an exponential line, the green line. One of this is a power line, the Bitcoin line. And this is how I think they're going to meet. Yeah, I think you could say that, but it's, in my view, again, this is just my take, and I'm not even a quant or physicist. I'm just thinking about this for a long time, and it's kind of one of my main conclusions is it is more adoption. It is more adoption. Like what the slope of this orange line, like people are always going to say that, yeah, I'm buying Bitcoin to protect my purchasing power, or I'm buying Bitcoin because interest rates might rise and they cause uncertainty, or even they might go down, but then there'll be inflation. So I want to protect, again, purchasing power. People have different reasons for buying Bitcoin. But specifically, if you look here, and I need to overlay the Bitcoin price probably, if you look here, let's say here, from here. Okay, so generally Bitcoin was going up as the money printer was going up, but the interesting thing was the Federal Reserve, all right? Federal Reserve from here was not money printing. From like July, I think it was August 2014. So this 410, looking at the green shaded area, is the balance sheet of the Central Bank of America, the Federal Reserve. Roughly, it's the money that they print. $4 trillion. Look at it as I scroll through. It's getting smaller. It's getting smaller. Now, other ones are going up. This is why I track all of it. It's true, but the Federal Reserve is getting smaller. Smaller, 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 smaller. Or flat to getting smaller all the way until just before this period. Now it's going to start to go. I missed it. Let's go here. Smaller, smaller. And then right about here, they start going up, printing more money because there was a big problem here in the repo market. And then unfortunately, this event, which shall not be named, I'm saying this I'm trying my censorship right now, just caused havoc. All right, but so we did a big money print, and then we actually saw Bitcoin and the broader crypto market line up with this. So it is true, it can line up with it, but it wasn't always, because even here, for example, yes, globally, which is good, I have the global research, right? Globally, money printing was rising by the time Bitcoin peaked in 2017. But the dollar, people always like to talk about the dollar as the main driver of all this. And it is true. It's 50% of foreign currency reserves is the dollar, even though only 20% of it is money, as far as central bank money goes. The dollar was going down during this period. So the point is, I still don't think to this day that this is the main driver of Bitcoin's price. I think it's just more like this stuff. It's just how it looks on a chart. I think it's more like this: market cap per daily active address. It's not really ever going to get out of whack from these trend lines. Looks wild here, right? But if you smooth it out, put a trend line on it, divide it by something within the network, it grows pretty consistently. So, long-winded way of saying, yes, the power curve does, I think, reflect all of these needs and wants of the market, but in my opinion, adoption is the most important feature. Well, I think the puzzle is solved from what I just said, basically, because I think this is way stronger than, for example, here. It has little, Bitcoin's growth has little to do with the growth of base money, is what I'm saying. All right, so let me take off this. This is just growing like exponentially at 7-8% per year. Bitcoin, is, you can see, is on a different trend. So my takeaway is that the trend itself is showing us something extremely powerful, not necessarily what the money printer is doing at any given month or year. Yeah, that is what I'm saying. Thank you. That is what I'm saying. And I think it might be different than, I'm just too lazy or whatever. I'm not writing this stuff down, but I just prefer to make the charts and show them and talk about them. But I don't think we can refine it. Well, we can always refine it more, right? But another way, a simple way, is to look at down on my website here. And then, so now I'm talking about the growth rate of the trend, right? Just this simple power trend, price over time. Used to be huge. Now we're going right now from, we finished last year at a 45% growth rate. We're going to finish this year at 42. Next year, 39, 36. So it declines. But another way of saying that is, as bad as it seems in the macro world, the dollar, the euro, the yen, the yuan, pound sterling, even like the Indian rupee or the Brazilian real, my buddy Fernando's home country, they are not increasing their money supplies even close to this. So I don't think it has anything to do with it. I just think it's something that's like there, it's in the background, but the key thing is just the growth rate. It's the adoption rate of Bitcoin. I was going to say one more thing. I already forgot it. But it probably is, it probably is explained quite well as, if someone did deep dives into Metcalfe's law. I don't know if Giovanni has done that. Here's his charts. But, Metcalfe's law, in simple terms, states that the value of a network increases to the square of the number of connected users. In this case, it increases by the cubed 0.5. And in this case, where I have this line, it's to the, whatever you would say, the scientific term, but nearly to the sixth. It took me a while actually to think about making this chart this way, but this is actually, if I would think of like the simplest way to describe both components of what I've been researching for the last 7 years, it would probably be this chart. And so from that side, I think it is a nicely simple model. I'm not like a fan of government deficits or big government and so on and so forth, but they're all exponential trends at the end of the day. Like you can slow down the debt a little bit, it's still going to grow exponentially. By nature, because of the nature of compound interest, that is how those things grow. You know, debt, money supply, stocks, bonds, it's all exponential. And so I think my conclusion, which I don't know if it's novel or not, I haven't researched enough to understand, but once you just look at Bitcoin enough and you see that this is just not how the Bitcoin network is growing, then we can start to ask ourselves, like, why would that be? And I think the answer is overwhelmingly little to do with how other stuff grows, but more to do how, just basic network stuff grows, like the number of nodes, payments, transactions, addresses. They will all have this power relationship, which just, it is a reflection of Metcalfe in some way, right? Or other observations of how networks grow, like I've talked about the distribution of like Facebook, Amazon, Apple. These are a few nodes control an enormous amount of traffic, all right? Whereas if you looked online at the internet at large, and I don't know, look at client server relationships, you have a few companies, a few nodes that hold a ton of traffic, and then you also do have a ton of nodes that hold very little traffic. So if you plot that distribution, that as well would be a power curve. It would be a straight line on log scale. Appreciate that. You're from Denmark, I recall, and I saw the Danish ambassador to Ukraine went to some of these bombings over the weekend, some of these disaster sites. Unbelievably good help from Denmark to Ukraine. I need to find this. There we go. Estonia, Denmark, Lithuania, Latvia. We're all together. It's the only way to be. Only way to be. Well, we feel the same way. The Danes can feel much comfortable, I think, geographically where they are compared to where we are. But actually, I was listening to something over the weekend, which was very good on, again, I'm trying to always appeal to, I know there's a lot of Bitcoiners that don't like to talk about the Ukraine war or whatever, but this speech that Stephen Kotkin just made, I'll just show you the thumbnail right here. The world in flux and Trump's role in a new equilibrium. He did it on April 25th, so before some of the madness. But he's really good. I mean, obviously, he's wrote, if you don't know who he is, he's written like the definitive biographies on Stalin. He's still finishing his third book. They're just massive tomes on Stalin's life. But he's very good on geopolitics in general. And he does make the observation that, the United States is just finding a new equilibrium. It is too expensive to pay for Europe's security and to take on any vulnerabilities in Asia. It's a more balanced take, and I think Denmark, the Baltics, obviously smaller Eastern European countries, they understand all of these things, as you can see here. But the big ones, the question is, the big ones, right? So this is France, quite small percent of GDP, and I don't know where Germany is. Germany actually has given a lot in totality, but so 0.7% of GDP. So these are the totals. It's not 300 billion that Trump says that America has given. So that's, Kotkin does it very well. He's, it's not exactly the approach that he would prefer to use. But if you ask Europeans, if the United States asked Europeans, are you prepared to fight if we had to go to war with China? And I'm not saying that that's like the goal. He's not saying that's the goal either, but obviously Europe probably wouldn't be prepared to fight or support that. So from that side, it is true that this is Europe's fight, what's happening in Ukraine. But I don't know. We're not united on it. We're different. We're different over here in Europe than the United States is with their federalist system. Yeah, so obviously we have plans, my family. But it's also, it's hard to explain. It's very good quality of life here in the Baltics, and to leave just because something might happen is difficult, especially when, my wife's family's from here and my family's back in the U.S., but it's difficult. Maybe 5 years goes by and it was very tense moments, but Europe is prepared. On the other hand, 5 years could go by. Europe turns out to not be prepared, and then we have a kinetic conflict with Russia inside the European Union or inside NATO. So it's just very scary. Like it's a total 1939 moment. I mean, feeling, not moment. Yeah, I don't think so either. It's amazing how Denmark has done, though. I mean, it's really important. They seem to always be the first ones to help in anything. It's another thing that Kotkin said. He's like, does Finland have a large army? Does Sweden have a large army? And the answer was yes, because they weren't in NATO. So it's totally true that NATO could have lulled big, relatively big, speaking European economies to sleep. And then the other thing about Poland, which I'm hearing, is that obviously Poland suffered like the worst. I mean, other than the Jewish people themselves, Poles suffered like per capita the worst. Although I guess Russians and Chinese probably actually suffered the absolute worst. But as far as people that were attacked, Poland suffered the worst in World War II. And, there's just this feeling in Europe, specifically with Poland, that they might not come. I mean, maybe even the Finns won't come. And that's something that we really haven't solved in the Baltics, because we're right in this hot zone, like dangerous intersection. But we do have conscription, at least in 2 out of the 3 countries. I think all of them have conscription now. But they're just small, 6 million people. How many people are in Denmark? Same? Or more? Yeah, it's about the size of Denmark, actually. The Baltics together are the size of Denmark. I just don't see how Putin goes back to normal. I mean, he has turned his economy into a war economy simply because he's stubborn and refuses to take the L, to take the loss. And yeah, I just looked it up. It's correct. Yeah, thanks. Appreciate it. There are many reasons why some people might not want to go early, even us. And I don't know. I don't talk about everything personal, but we're not gonna run off just yet, and hopefully we can just keep preparing ourselves. It adds up to this, Mugat. It adds up to this. Fiat grows here, constantly, exponentially. Bitcoin grows here, proportionately, on a power curve, and they meet here. And by the way, Danny from What Bitcoin Did mentioned this on the show. He intuited correctly. If you look at this, and you can see that obviously on log scale, one is a straight line, but one is not. It is true that after, like 50 more years, or I don't remember the length, the fiat money would keep going exponentially, but the Bitcoin power curve would go back under again. It is true that would happen if you extend it out far enough. But I think, again, I think it almost becomes like philosophical. We're talking like 100 years in the future. I think already by the time where this number starts to get to 100%, and remember, 100% is still 50-50. That means the green line is all the stuff that's not Bitcoin, that's like money, gold, government money, central bank money, silver, and Bitcoin is the black line. So it's still 50-50 when it reaches 100%. But I think that somewhere, maybe here, when it's getting up to 50%, like we're well on the way where everybody can see that Bitcoin is just churning along at this unbelievable pace. I think you start to get to some philosophical things, like maybe we're going to have Bitcoin bonds. Maybe we're going to have Bitcoin equities. And from that standpoint, I think that you just start to change the perception of what Bitcoin is, and the whole system could change. I definitely think that could happen. I'm not saying it just continues on at these levels mathematically. Yeah, I mean, CS, I think I answered that, what I just said. It's the system can change. I think the system will change. But this curve can go on a lot longer than people think. I mean, it's been going on this way forever. You know, if you were a gold bug in 1980, you would have thought that this was like an unstoppable trend, the gold trend. Let me pull up the gold trend just to show you. Yes, it is. Definitely for myself included, Anders. Yes, it is. I've heard a fact. I should put up my GDP chart, but Baltics are already up. You know, so Russia's the GDP per capita is like 15,000, and Ukraine's is 5,000. Okay, Baltics is 30. Estonia might even be 33,000. Okay, dollars per person, and at least visually in the modern world, as far as conscription and people wanting to fight, I heard some analysis of this, and that like we might actually expect a more peaceful world when everybody gets richer. Of course, I absolutely agree with that. But to put a number on it, it might be something like 30,000, 35,000. And so the Baltics are at that right now. And I've heard Ukrainian soldiers talk about how, you know, they don't think that Europe is prepared if this $15,000 a person economy that Russia is and very violent wants to come after them. There might not be enough fighters. I don't know. Obviously, in the Baltics, we're worried about that the most, just from manpower and everything else. So, good morning, Slanik. Good morning. Okay, so here's gold. To go back to your question, CS. Let's go log scale. This is gold price, very simple. When did I cut this off? Yeah, this is month end gold price. This doesn't matter. Stock to flow, all these things don't matter. I'm just showing you. Doubling rate is way better than stock to flow. So the slope of this trend line since 1971, August, is 5.1%. Okay? It's this black line. The black line that goes on the diagonal increases at a constant exponential 5.1%. You see the 5.1% right there, right? Which is there. Okay, right-hand axis. You know, I think about this a lot in that, you know, when gold got depegged from the dollar, it went crazy, right? Intraday, it finished 2 seconds, $850 an ounce, somewhere here. I think it was January 1980. I think it was here, actually. Then went into a 20-year bear, all right? So went below the trend line that it set for itself around the 90s. Didn't bottom until here, where Gordon Brown sold all the British gold. And then back up again and going high. But, you know, if gold can make this run for 50 years, I don't see why government paper money can't make the run as well, especially when they have the guns. Yeah, I mean, in general, of course, it varies wildly, right? Like you go to South America, Argentina still has huge inflation, although Malay has gotten it way down. But yeah, if you blended it all together, which was the goal of my base money analysis, you blend it all together. It's including gold, including silver. It only comes to 7-8%, closer to 8. And I can tell you that another way, right? So gold, this is gold price. Uh, the gold market cap would also be like this, but gold price is growing at 5.1% per year. That's actually slower than base money, which grows at like 10%. So there's you kind of take the middle of that because both of them are, 20, 25,000, 20, 25 trillion. Sorry, 20, 25 trillion. If you understand what I'm saying. So that's at the net end of the day. That's what this supply curve shows, measured in dollars. And yeah, I mean, think about how mad the world was here. Like the world was, people were not quite tearing each other's eyes out, but from here to here, it's just crazy. They they pulled it back. They pulled it back. We might not. We may have another bump like this. It may last longer, maybe shorter. But if you're looking for that sort of hyper Bitcoinization moment, at least I'm happy to say I've never had that feeling, mostly because I've been looking at a lot of these long-term charts, and I think it's fine to be prepared if that happens and accumulate as much Bitcoin as you want or as you can, for sure. I'll not complain if the whole system, collapses into Bitcoin, but this seems much more logical. And back to our Ukraine-Russia discussion. Yeah, this scares me the most. And these could be related, by the way, right? I mean, oddly, you may have the Axis powers, so to speak, using Bitcoin, like Iran, Russia. China's kind of weird. They hate Bitcoin because they know they can't control it. By the way, one of you, I don't remember who, but asked me about Frank de Cotter, I guess, the Dutch Chinese historian. And I'd never heard of him, but he also did a great interview from the Hoover Institution recently, which I highly recommend, highly recommend. I'll just put it here just to show. Was it this one? I thought it was even sooner. Yeah, this one.
Let's say China.
China. Here we go. Let me take off your comment, Anders. So this one, caveman Marxist, Frank de Cotter, on whether China is a fiery dragon or a paper tiger. It's a question mark, but it is true. I mean, so China's here. Let me show you on the base money chart. Where's the base money chart? Did I cover it up? Here we go. So China's here, the gold in this chart. It's a solid 20%. Right? This is actual yuan. This is what they tell the world. They have yuan printed in dollar terms. Okay, so it's a big portion there. You see, 1/5 of the world's money. But he makes really interesting points, talking about how China's 99% state bank capital, and that's true. I look through the history of the Chinese money supply, and it's all state banks. I mean, there's no private banks. How they calculate this stuff, and you think about. I think Peter Zion said this. I know I berate him about his Bitcoin views, but during the pandemic, maybe I'll get censored for saying that word now, but during the pandemic, there were it took a long time for China to sort of deal with the problem. And then when they finally did, they started like spraying runways, disinfecting the runways. I remember that story. I'm sure you guys remember hearing that. Um, they just make goofy decisions. And, you know, I'm a capitalist through and through. And I think the Soviet Union falling was a pretty great example of how capitalism doesn't work. Now they have crony capitalism, like to the extreme in Russia, like mafia style. But um, it's not clear to me either that China is going to come out of this at the end on top. Like I certainly don't want to have a war with them. Everybody should be prepared, but um, it's not clear to me that they're going to be just destroying everybody in the world markets. Yeah, I mean they're related. It's all related, right? Yes. I mean, how could they have that view? And then there's another. I can't remember this interview. I'll have to find it. I'll show it tomorrow. But it was another Asian expert on China. I think it was a Hoover Institute uh, interview. And he was talking about, you know, they do work hard, even though like it's a total black box what's happening in the Politburo in China, like the at top levels. Uh, it's not like Xi is going golfing 3 days a week. Like they are working hard for sure. They are trying to figure out how to manage all of this geopolitical tension that is surfacing and bubbling up now, and trade wars. So it's not like they're incapable, but at the same time, it is a planned economy, and so I do love that for the side of freedom where we actually have prices and markets. Uh, you know, it might be a paper tiger, but anyway, this is a very good interview. It's very good. I would highly recommend this. And someone on this chat told me about him a little bit ago. I had never heard of him. It's very good. But yeah, it's kind of becoming a theme here, guys. I know if you've been tuning in and retuning in, but I think this is the chart. It may seem hard to believe, you know, if you're kind of new to Bitcoin and you get really excited about money printing and how massive the deficits are and all the rest. Like I certainly believe that this will be more elevated in the next few years because remember, they're pulling way back from the crisis of 5 years ago, and you can see that right here. This is just the fiat money supply, 26.2 trillion, which is the first quarter number, which I'll publish hopefully by tomorrow. Is in the lower 2.5 percentile move from trend. So the point is, pendulums always swing. There could be war. There could be trade wars. There could be deficits that can't be serviced. That can't service, you know, the interest, so they need to print money. Although I talked about that a little bit the other day, I think that's maybe overblown, that idea. Remember, we are above the all-time average in the United States, but we're still not at depression levels. It's like 24 cents on the dollar of taxes to interest. It's huge. I'm not excusing it, but we think that these things can go on a lot longer than we don't think that these things could go on a lot longer than they actually tend to. And this is what I think I can bring the most, is I have done the work in these years of just reading all these newsletters that said the world was going to end, money printing, run to gold. Never panned out. Yeah, gold is screaming now. Peter Schiff's happy now, but how much happier would he have been if he was on this trend? So There's a lot of different messages in this stream, but we're super lucky that we have Bitcoin because it's a pretty predictable trend. It's a network. It's being adopted. I don't see why this would break anytime soon. Yeah, he's really good. I really enjoyed it. I don't read about it's China as much as I do about Russia, but yeah, I hear you, man. I hear you. That's certainly the case for us here, but at the end of the day, you got to move forward with life, and we just got to be prepared. I guess we just got to be prepared. I certainly am worried about the next 5 years, but I'm not ready to give up on the Baltics yet. It's a good panic. I'll just chalk up life circumstances to very good learning. Whatever it might have been. I think we've all been there some way, shape, or form. That's good, man. Got to accept it. Got to accept it. You have to accept it. Yeah. 100%. 100%. Like this $2 trillion where we are right now is a drop in the bucket. And I know people want to make the calculations of like the global money supply or the global debt supply, which is hundreds of trillions of dollars. I've tried to explain a lot. I don't think that's the right numbers. The right numbers are here: gold, silver based money. But even here, we're at 5%. And I think I talked about this the other day, but so time to double on this curve, it's something like 2 years, right? Yeah, May 2027, and we'll get to 4 trillion. It's not going to be smooth, not going to be easy, but then once we're at 4 trillion, that's 8% of projected total. Let's double. Now let's just get to the 2 trillion higher. Wait, sorry. Here. So 2 to 4 to 6, not doubling, just in increments of 2 trillion. So still not to the end of the decade. And then we're at over 10% of the total. And then 2 trillion more will occur already here within probably just a year after that. So there, 13%. So it's an interesting model, and still early. Like in percentage terms, like 10%. If I'm correct on this ratio, then we still got till 2028 to be at 10%. We're only at 5. I think it's plenty of time. And in the meanwhile, we're going to have some booms and busts. That I'm pretty sure about. I get it. I get it. I think everybody goes through it. Probably the only ones that really didn't have to worry about that too much were the 2010, 11, 12 buyers. And even there, I think Roger Ver sold a huge stack of his Bitcoin for Bitcoin Cash. I mean, he's still doing just fine, but although I haven't heard of what was his latest Uh, the latest with whatever happened to him at the when he was arrested. But yeah, this level, 2010, 11, 12. Obviously, you can just buy a few bitcoins here, a few. Use the term "few" lightly, but you could have bought a few, sold a bunch, and still had a few left over. Not so, I think, for the average, especially for the average young person, even here. Okay, this was still great at $200, but it was harder depending on your salary. And now it's maybe it's the same level of difficulty here. I think it obviously is. But yeah, these would have been the good old days. Whew. Impressive, man. Here? Was it on the way after this top, or was it here up to this top in 2011? I understand. Yeah, for me it was I first heard about it here, but then I've said this a few times in the latest streams. It's like thought it was a scam here. It was just crashing down from that first empty Gox hacking. Then it went up to here, crashed back down. Wasn't really still on this pump where I really started to take it more seriously. But as you'll notice, that is getting close to $1,000. Yeah, the old empty Gox. Did you have a claim? Did you have a claim that you held on to? Because obviously that was a 10-year saga. Unbelievable. Literally a 10-year saga. Is that how they paid it out? They went back to the fiat at the time because I had heard they were going to do it in yen, but Karpelis refused it because he didn't want the coins because he would have been like a billionaire if he already wasn't because of the revaluation of the exchange rate. But I had heard that Karpelis didn't want it. So I don't know what happened with the extra. I haven't really paid attention. I was not a claimant though, so. $27th or $28th. So you remember, Daniel. Yeah, it's a crazy story. All those guys fighting and stopping people from getting paid out. It was not a good situation. Yep. Yeah, that might have been. Actually, I'll just look right now. So they did it the way you're saying. This is old, but they obviously had what it was 600,000 bitcoins, and then it turned into 300,000 bitcoins. But regardless, they only paid out 140,000 bitcoins. So who got the rest of it? Does anybody know? I don't know. We don't have to do too much research live, but someone got rich on that, and it wasn't the creditors because they had many more bitcoins than 140,000. I know that lawyers get paid, obviously, but it's funny. Yeah. Oh, you're saying actually you had a euro balance on the platform. I get it. Yeah. I'm just talking about the bitcoins themselves for anybody that had the Bitcoin. Yeah, exactly like you're saying. It would have been harder to swallow with a BTC balance because they did not get the full BTC balance. Yep, that was definitely part of it. I don't know. I can't remember, and honestly, I'm not even getting a full. It was 850,000 was the first, but then that got apparently found like half of those. I cannot remember if it was 1-to-1 on your Bitcoin balance, but like I said, I wasn't involved in the creditor process. So here we go, carrying on, very close to the trend line. As of yesterday, $2,000 above trend. Still slightly pulling that trend back up. It's great to see. Great to see. All right, guys. I think that's going to be it for me today. Thanks for joining me in the recap. Bitcoin is more Metcalfe than it is Moore. It is not Moore's law. Moore's law is exponential. I'll try to graph Moore's law with something. Doesn't matter what. Like actually, the official, the old chip power, computing power efficiency. I'll try to just find that to get the slope and then to show the Bitcoin power curve to see how it relates, but they won't equal. Bitcoin is more Metcalfe's law, power law, not exponential. That's the thing to keep in mind. Thank you, Anders. Really appreciate it. And thank you to the Danish people for all you do for Eastern Europe. All right, guys, signing off. Have a good week.